Hello, we're going to be looking at euro dollar because I've opened my mouth. Hi, welcome to the channel. If you haven't been here before, my name is Langers and I am the overgrown child that is the Scruffy Trader. And what I'm trying to do is kind of put trading in the real world. Maybe show you a trick or two along the way and inspire you with your own trading. That sounds good? Please click the little subscribe button. Genuinely helps. If you've got a query or a comment, just drop it in the section below. I genuinely answer every one of them. So what are we up to? Well, earlier on this morning, I opened my gob to the guys in the scruffs. And I mentioned this trade that I'm looking at. That is there. Called it 20 past 10. It's now 11:30. I updated it. It's sort of just after 11, 10 past 11. Just so they know what it is I'm looking at. And the guys were already in on it, having a bit of a look, as you can see there. Already having a bit of chat about different things. And that's kind of what we do. But I'm a good believer that if I'm going to put my head on the block by saying this is what I'm going to do, I should back it up and trade it as well. So that's exactly what I'm doing. So let's have a quick look. This is euro dollar. Chart's marked out. It's looking pretty good. It's getting well close to what I'm after. Time, just so that we can kind of see it. If I make that a little bit smaller, you should be able to see the time. There you are. Friday, 11:35, and the actual chart that we're working on, there it is there, 11:35. Okay, so it kind of shows what that is. So what am I essentially looking at? Well, the thing with trading is, and I get a lot of people saying, your trades are all the same. Well, that's the point. They should be. Repetition is what makes you a good trader. Not jumping from this system to that system to another system. If you do that, you're going to be like headless chicken all the time. And you're never going to get anywhere. I look for certain criteria every day. I have various tools in the tool bag, but those tools are for the right job. And in a situation like this, where you see a strong drive down, it has to pull up. You know, it has to retrace. Well, there's the retracement. And then it comes up to a level, an area of interest, if you like, which is here, and I've marked that in. And if you look at it, you can see it's stalled at this area before. Now, if it holds this level, its next logical one is up here, which you can see is nicely marked in. But why is it an interest? Well, look. There we go. For the last sort of early morning, right the way through to now, it has never looked back. Not once. Okay. If you take this out to a bigger field, kind of get to see a bit of a better picture. Absolute slam down. It cannot continue in a single direction. Look at the angle of descent. It's massive. And then wallop. Up it goes. Right? Same angle upwards. Okay. But it is stalling here. And look how many times it's stalled at that level before. So I know this is a good level. It's a good level. It is Friday. People don't like to hold trades across the weekend. If you swing trading, it's not a big thing, but it's because they are worried about gaps on a Sunday night. And if you get it wrong, the sentiment can change and you could be caught on the wrong side of a trade. And it's an unknown factor, so people don't like holding it across the weekend. But then you've also got your overnight charges and your weekend charges, so it actually costs you the whole. So I personally don't like to hold trades across a weekend, and a lot of traders are the same way. So knowing that, and now it's coming on to lunchtime Friday, traders are going to want to get out. They want to finish off for the week, go home, spend time with their families, all that sort of thing. And you can use that to your advantage. So how do we do it? Well, it's very simple. You look for a good logical point. Now I drew this zone in, okay, and I've moved it up slightly as the price has gone up, but the price has now come down and it is in the zone, which is where I want it to be, and it is underneath this level, so I want to see it. All right, so I want them to see a nice solid close underneath it, and kind of this candle here. Okay, so what I'm going to do, I'm going to put some orders in down to this level. Now, because this level, if I show you, we're looking at what, 15 pips. Okay, so what we're going to do is we're going to put 3 orders in, and you've seen me do it so many times because it's the way that I like to trade. Okay, so we've got 1 there down to 15, so bingo. Another one in the same place, but this one's going to be at 10. Bingo. And this one's going to be at 5. Right. So what have I done for myself? What have I created? Well, it's very simple. I know this is also a strong level. Okay, I want the price to come to me, but I also want it on the underside of this black line. It is pushing away slightly, but the signs are it's pushing down and it's in this little zone. Now there's a couple of things that I can do. So if I measure this out here, I like to use zones all the time. Now I know up there is a solid zone. Turn that red, like so. And I also like a midpoint. If you're using a fib tool, it's a standard tool, it's nothing special. It's excellent for just measuring things out. So I want to stay on the bottom side of here because I think this will be the next logical bounce point. Now if I'm tagged in and it starts moving up, I'll look to re-enter the market around, well, certainly just above the top of there and there for a pullback down to here, and I'll put another maybes up here, but they are essentially my scale points. So I have a potential one around this area because the markets will test highs, so it's there. So I'll say if it goes up, put another order in, see if it'll pull down, it'll pay me, get me out of trouble. If that fails or it takes me in and it keeps on going, I'll enter again here, because when I trade I like 5 positions, but those 5 positions are actually just one. I just break it up. Okay, and the reason I break it up, it helps me scale, because not only do I scale out, I scale in. So that's my initial position, and the idea of the 5, 10 and 15 is very simple. The markets bounce, and they often do, and you can see that here. It's gone up, it's bounced down, it's gone up, it's come back down. Well, 5 ticks is relatively easy to get, certainly on sort of euro dollar, because you've only got a spread of 0.6, so it doesn't have to go that far. So it could actually come down, hit the target, pay me, bounce back up to where it's been, I'll enter it again, and it can come down, pay me again. Simple as that. So there we go. And it's as simple as that. And oh, there we go. So happy days. What's that one? Sorry, the guys are on that screen because we're all monitoring this live as it's going, and this is about to pop. We can see that. So what I'll do, I'll just continue to talk to the chaps, and I'll come back to you when the trade is finished. But you may well see me put an order in here and here, and it's all part of the management of trades. There is videos on scaling in, scaling out, and basically it's trade management, because too many guys out there who are selling systems and one thing and another.
You ding dong!
They seem to think X marks the spot. It doesn't. You know, all X does is give you a starting point. Then you need to manage your trade. But not only are you managing your trade to get into it, you're managing to get out of it. And very few sort of touch on that element. That you say, oh yeah, it's a moving average cross, this is it. Looks brilliant in hindsight, but in reality, it's quite difficult. You need to manage your risk, manage your profit, manage yourself. And that's a difficult thing to do. The emotional game in trading is huge. It really is. And it's something that no course can prepare you for. And I guess it's why I don't sell courses, because I don't. I have very little interest in selling a course. But if you're stuck, I'll happily help you. Like I say, drop comments below. My contact details are in the description. And if you really want to enhance it, by all means check the scruffs out. And we all help each other. So crack on, and we'll see where we get to. Get on. And that was that. All done. Did pretty much what I said it would do. What have we made today? There you go. Happy, happy days. Good end to a good week. So, what was all of this today? All right. As I said at the start, we have had a buy up for quite a while. You can see that. It's come into a significant level, which is here, and that's identified here. You can see that. All right. So it was a reasonable assumption that this level was going to be a reaction. Now, because of that leg, my theory was a retracement. I needed to see it come under here, which it did, entered me in. When it spiked up, I still had a good theory, judging by, move this down a little bit, judging by these candles, that it would come down, because as it pushed up, it never broke the top. So it was a reasonable assumption to put a couple of extra orders in. Wallop. But because I'm wanting it to be in and out, I just put a small target in, pop, pop, gets me paid, moved up, put the order back in, pop, get paid again, then let it run down risk-free. And that's my Friday finished. So there we go. I hope that kind of makes a little bit of sense. And if you are stuck, by all means, find my contact details in the description, etc. There's some decent links in there as well for sort of FinViz and things like that. It's all free software that does help you with your trading. So as always, guys, do what you love and the money will follow. See you all in the next one.